Hello everyone, welcome to KPS Learning. Today's our topic is audit. So first we are going to start with the meaning of auditing. So auditing, everyone know that there is an auditor who goes to the company and do the auditing process. So he's an independent person. So his examination will be also independent examination. So, auditing, it is an independent examination of financial information of the entity, whether profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion. So, what does auditing means? It is an independent examination. It is important word, that is independent examination. And whether the company is a profit oriented or not, and whether the company is a big or small, when such an examination is conducted with a view to express an opinion, it is known as auditing. So what the auditor will do, this is an company. Okay, so this is an auditor and these are shareholder. What the shareholders will do, shareholders will assign auditors to go to the company and do audit. So this auditor is an independent person. Okay. So they will go to the company and the company is preparing financial statement. So the what the auditor will do, auditor will go to the company and check whether the financial statement is presented in a true and fair manner. That means that they will check whether the company has overstated or understated the assets, liabilities, income, and expense. So what they will do, auditors will go to the company and check whether the financial statement is presented in a true and fair manner. That means it is not overstated or understated. The assets and liabilities, income and expense. Then what they will do? Finally, they will provide, they will express an audit opinion. So this is the last process. The auditor is going to the company and express the audit opinion after checking whether the financial statement is presented in a true and fair manner. So I hope everyone understood the basic of auditing and who is an auditor, what he is doing in a company and all. So another meaning of audit is examination of books, accounts and vouchers of a business. Enable the auditor to satisfy himself whether the balance sheet is properly drawn up to as drawn up as to whether the as to give a true and fair view of the state of affairs of the business, whether the profit and loss account give true and fair view of the profit of loss of the business, and explain explanation given to him, according to the explanation given to him, he will see whether the financial statement, that is balance sheet and the profit and loss account, give a true and fair view. And if he is not satisfied, he should explain the reason why he is not satisfied. Okay. So I hope everyone understood what do you mean by auditing. Next is characteristics of an audit. So what is the characteristics of an auditing? First characteristics, verification. So you can tell that auditor is going to a company and the auditor is providing his own opinion, independent opinion. So for providing an independent opinion, he is first verifying the books of account and all. So what the auditor is going to do? First, verify independently financial statement and records to ensure they reflect the true financial position of the company. So first characteristics of the auditing is verification, then compliance with standards. So the auditor will ensure whether the financial statement are prepared in accordance with the GAAP, generally accepted accounting principles, and IFRS, international financial reporting standards. Then internal controls assessment. The auditor will assess whether the company has a strong internal control system. If a company is having a strong internal control system, then the work of an auditor is reduced because they are detecting the error and fraud properly, so that the work of an auditor will reduce. So they will ensure the effectiveness of the internal controls of the organization. Then risk management. Auditing helps identify and assess the financial risks that could impact the organization. Auditor provide recommendation to mitigate these risks and enhance the overall risk management framework. So what the auditor will do? Identify and assess the financial risks that will impact the performance of the organization, and also they will detect it and provide recommendation to reduce it or eradicate it. Then fraud detection. So auditor will look for the signs of fraud. If there is any irregularities, then the auditor will look for that, and he will provide the test and procedures. Sorry, he will conduct the test and procedures to detect any misrepresentation or intentional errors in the financial statement. Then stakeholders confidence. The auditors, for example, this is a financial statement and here it is a auditor's report. So the stakeholders, you know who are the stakeholders. Stakeholders are the investors, creditors, regulators, and financial institutions, like that. So whose report you will trust? Of course, you will trust the auditor's report. Before investing in a company, if you get a financial statement and auditor's report, which one you will trust? You will trust auditor's report, right? So, so it will increase the confidence of the stakeholders, and also the increase the credibility of the financial statement. That company is preparing the financial statement and an independent person is coming to the company and checking whether the financial statement is correctly prepared. So it is a second assurance that auditor is giving an assurance that the financial statement is providing true and fair view. So it will it will enhance the credibility of the financial report and also build confidence among the stakeholders, right? Then next is continuous improvement. Auditors provide feedback on areas where the organization can improve its financial process and controls. This helps the organization enhance their financial practice and operational efficiency over the time. The auditor will provide a feedback and on the areas where they have to improve and what all process they have to do, and how increase the control. If they want to increase the control, then they will provide a free feedback. So this will enhance their financial practice and also the efficiency over the time. So characteristics of auditing is over. So first characteristic, verification, compliance with standards, then internal control assessment, risk management, fraud detection, stakeholders confidence, continuous improvement. I hope everyone understood clear with the topic characteristics of auditing. So then next is main types of auditing. So there are so many types of auditing. So first type is financial auditing. Audit. It is an examination of organizations' financial statement and related operations to ensure they are accurate and conform to accounting standards. So the process is to provide assurance that financial statements are free from material misstatement, to give stakeholders the confidence in the organizational financial integrity. It is conducted by external auditors or internal auditors. Conduct the financial audit. So financial audit means it is an examination of an organization's financial statement of an organization is examined by a financial auditor, and related operations also are examined to ensure they are accurate and conform to accounting standards, and the main purpose is to provide assurance that the financial statement are free from material misstatement, that is true and fair. And this will give the auditors confidence in the organizational financial integrity. Then it is conducted by external auditor or internal auditor. Then internal audit, it is conducted by an organization's own staff to evaluate the effectiveness of its internal control, risk management and governance process. So this is an organization. So organization have so many divisions. So one of the division is internal audit department. So it consists of internal auditor. So what they will do, they will check the effectiveness of the internal control of the organization. So this is what it is written. Internal audit, it is conducted by an organization's own staff to evaluate the effectiveness of its internal control. And also, if a company is having an internal audit department, then if a company is internal audit department, increase the confidence of stakeholders. So then the purpose is to identify areas of improvement, ensure compliance with policies and regulations and safeguards. Before the external audit is going to conduct, the internal auditor will ensure whether the financial statement are prepared in compliance with the policies and regulations, and also that is accounting standards and laws and regulation. Then safeguards are provided, then improvements and where they need improvements, these things. This is the purpose of the internal audit. So it is mainly conducted by internal auditors employed by an organization. External audit, as we said, like a financial audit, independent examination of organization financial statement, related operations by external auditor. Purpose is to provide an unbiased opinion. Unbiased opinion means independent opinion, that like without like without any pressure. The auditor will express an opinion without any pressure and all. So that is unbiased opinion on whether the financial statement present a true and fair view of the company's financial position and performance. Ensure accuracy, completeness, compliance with accounting standards. Then conducted by CPA or external auditing firms. Then performance audit. Performance audit means it is performance audit assesses whether an organization is achieving its objectives effectively, efficiently, and economically. So whether the organization will have an objective. So whether the performance audit will check whether the organization is achieving its objectives effectively, efficiently, and economically. Then the purpose is to evaluate the performance of the programs and initiatives and recommend improvement. The main purpose is to evaluate the performance of the programs which has been that means the objectives, whether they are following the objectives and all. Evaluate the performance of the programs and initiatives and recommend improvements. So it is mainly conducted by internal auditors or external performance auditors. External performance auditor means the company will assign an audit team for checking the performance of the programs and initiatives. So that is that. Next is compliance audit. They will assess whether an organization adheres to the laws, external laws, regulations, and internal policies. The main thing is that the purpose is that ensure the organization is following legal and regulatory requirements and all, mainly conducted by the external auditor, regulatory agencies, or internal auditors. So compliance audit is also over. Operational audit. Operational audit means it evaluates the efficiency and effectiveness of the organization's operation and procedures. Purpose is to identify opportunities for operational improvements, cost savings. Internal auditor or external consultants conducts the operational audit. Next is forensic audit. So forensic audit means if a company is doing something fraud and all, so if the company's employees or whoever it is doing something against the rules and regulations, and a forensic audit team will go to the company and check whether the company is doing anything wrong. So forensic audit, it investigates the financial records to detect and prevent the fraud, embezzlement, or other financial misconduct, to check whether the company is dealing with some other kind of activities. Purpose is to gather evidence for legal proceedings and to cover financial irregularities. So the main purpose is to gather the evidence for the legal proceedings and to cover financial irregularities. Forensic accountants and auditors specialized training conducts the forensic audit. Then tax audit. They will examine the organization's or individual's tax return and financial records to ensure the accuracy and compliance with tax laws. So they will examine the organization tax return and also they will ensure whether the accuracy and compliance with tax laws. Purpose is to verify the taxes have been correctly reported and paid. Then tax authorities or internal tax auditors conduct the tax audit. Then next is objectives. Objectives, the primary objectives and secondary objectives. So the primary objective of an auditor is verification of accounts, balance sheet shows true and fair view, then profit and loss shows true and fair view. So the primary objectives, there are three primary objectives. First is to verify the accounts, balance sheet shows a true and fair view, profit and loss shows a true and fair state. Then secondary is the error detection and prevention, fraud detection and prevention. So the primary objective of the auditor is to verify the accounts, then check whether the balance sheet shows a true and fair view, check whether the profit and loss shows true and fair review. Then the secondary objective is to detect the error and prevent it, detect the fraud and prevent it. Next is difference between internal audit and external audit. So internal audit, it is conducted by employees. That means a company will be having an internal audit department. So the employees of the company will be doing the internal audit. An external audit, it is conducted by the third party, that is external auditor. And internal auditor is appointed by the manager. External auditor is appointed by the members. User of the report, internal audit user is management and external audit user is stakeholders. Then obligation, internal audit it is voluntary, but external audit it is compulsory. And timing, internal audit is conducted throughout the year and external audit is conducted once in a year. So here we end with this topic, and I hope everyone understood the topic. If you liked my video, please like, share and subscribe to my YouTube channel. Stay tuned for my next video. By then, bye bye.